Nouriel Roubini of Roubini Macro Associates joins us now for more. Nouriel, good morning. Good to see you.
Great seeing you.
Walked into the studio and said no longer Dr. Gloom, Dr. Boom. Is that right? What's behind the new Dr. Boom?
Well, I've been arguing for over a year that there's a productivity growth acceleration because of technology of the future. Everybody's obsessed about Gen AI, but there's also semiconductors, robotic, automation, quantum, fusion, defense tech, fintech, new material science, space exploration, biomedical research, and so on and so on. They're all related to AI, but they're all separate, essentially, silos and verticals, and each one of them, thanks to AI, there's going to be a significant boom. US is ahead in most of them, China is ahead in some of them. So it's a game between US and China. That's why I've been saying that potential growth in the US is already well above 2%, and by the end of the decade, it's going to be closer to 4%. I'm quite convinced of that. When I say to economists, they say you're crazy, 4% growth. But when I speak to technologists, they tell me you're still Dr. Doom because 4% is too low. It's going to be higher than that. But I think we'll be close to 4.
Let's say you're right. How does that change the outlook for interest rates, if at all?
Well, you know, Kevin Warsh argues, like some others, that implies that because we're going to have lower inflation, that justifies lower Fed funds rate. I think is incorrect, because if potential growth is higher, the equilibrium real long rate and also the real short rate, Fed funds rate has to be higher, because there's a correlation between real growth potential and real interest rate. It's true that then inflation will be lower than 2%, maybe closer to 0. But today, say, you have a Fed funds rate where most of it is inflation and 1.5 of it is maybe the real rate. But once you have a growth of 3-4%, the equilibrium real rate has to be at least 3%. Maybe inflation is 1, and then you get still at a 4% nominal. So having a lower inflation doesn't justify lower Fed funds rate if growth is higher, and growth is going to be higher. I think there's a fallacy in that argument.
Well, he might deliver it either way. And if that's the case, if there is a bias to cut at this FOMC in the face of what you're predicting, do we face a real risk of overheating?
Oh, yes, but I'm not sure he's going to be able to deliver it. You know, in the Fed system, the Fed chair is a primus inter partes, is a constitutional monarch, is not an absolute monarch. One vote, and he has to convince the rest of the FOMC to go along. And if the economy is strong as it is, and is accelerating, if inflation is still well above, target, and if it's not going to fall very much, it'll be hard even to justify one rate cut this year, let alone 2 of them. So he cannot really bully the committee. He could end up into a minority and be outvoted. So I'm not sure. And the data so far don't justify having lower Fed funds rates. Maybe one cut later this year in the second half, if gradually inflation is going to be slightly lower. But growth is going to be very strong this year, much stronger than last year. I mean, Q3 growth was 4.3%. The last estimate of Q4 is 3.7%. So we don't even have that growth, recession that everybody was predicted. There's actually a growth acceleration. And this year is going to be even stronger because you have the tailwinds from AI continuing. You have easy financial condition. Stock market and other indices are all-time high. You have the monetary easing in the pipeline, and you have fiscal stimulus because all the spending cuts were pushed until after the midterm election. So you have strong forces going to lead to an acceleration of the economy, not a slowdown of the economy.
I remember once upon a time, I knew someone whose name was Dr. Doom, and he talked about fiscal deficits. He talked about the breakdown of world order. He talked about inflation. He talked about a shift away from the financialization of a world where suddenly you couldn't get these returns. What happened to him?
You know, I wrote this book, Mega Threats, in 2022, when I said that lots of trends are going to lead to lower growth and higher inflation. And that's exactly what happened. There were a whole bunch of factors, but there are also chapters on AI in which I said, if things that look like may happen, but it hadn't happened yet, because at that time in October 22, ChatGPT was not out yet. The proof that you could do fusion energy was not there. The improvements in quantum were not there. All those things happened. They were already in the book, and I said, if those things are going to happen, there'll be an acceleration of growth, reduction in inflation, and therefore we'll be in the utopian equilibrium as opposed to dystopian. And what was speculative at that time has materialized as being real since then. So since it happened, and I was writing about it, now I'm believing that actually tech optimism, that, as I said, tech trumps tariffs, because tech is first order, 200 basis points increase in potential growth, and everything else that is, stagflationary, that is not just tariff reduction in migration, fiscal deficit, fiddling with independence of the Fed, fiddling with the rule of law. All the other things are second order. So I said, tech trumps tariff, but also tech trumps temper tantrums too, because all those things are second order, and market discipline has forced him last year, as I exactly predicted in April, to back down. When the market was down, he was forced to do deals on trade that pushed the tariff rate from 30% to 14% and falling every day.
So Dr. Boom, the sort of gap between dystopian and utopian, pretty wide. And I'm just wondering what happened to some of the political aspects of this, especially as it relates to jobs. I mean, if there is significant job loss, won't the political backlash be somewhat significant? I mean, how do you sort of dismiss the dystopian chapters in your book?
Well, I do believe that eventually we're going to get a permanent technological unemployment, but it's going to be a bit of a inverted kind of a J-curve. Initially, actually, demand for labor is going to increase because you have to build all these data centers. There'll be an investment boom, and not just in AI, across the economy. And therefore, demand for labor is going to increase. We're already at full employment. So for a few years, we're going to be actually okay. Of course, people are out of college. Those first-time jobs are in short supply and this and that, and that's becoming an issue. Longer term, absolutely. I think that by the end of this decade, growth is 4%. By 2040, 6%. By 2050, with AGI, we're at 10%. But when growth is 10%, the unemployment is going to be 80%. But it's better to be in a world where growth is 10%, unemployment is 80%, and with growth doubling every 5 years, you can redistribute, because you can tax the winners and redistribute.
In 2 minutes before the end of the show. I mean, we don't have enough time.
I tell you, that's my bet. We'll get to AGI, we'll get to SAI, and there'll be exponential growth.
Not for me to disagree. That's your forecast.
So that's my.
Let's say you're right. So, how does the government respond in that scenario?
Listen, we're already in a mean-tested UBI system. You know, I live in New York City. My marginal tax rate between federal, state, and local is 54. With Mandarin, might be 57. I pay real estate taxes. I pay also sales taxes. And all this progressive tax system is redistributing income to those who are rightly so left behind. Medicare, Medicaid, Social Security, unemployment benefit, disability, food stamps. So we're already in UBI de facto. We'll have to make it bigger. So in a world in which 10% of the people get most of the income and the wealth, you're going to tax them more and you're going to redistribute to everybody else for two reasons. Reason number one, if you don't do it, there is a revolution, as long as there is democracy. Reason number two, if you don't do it, there's not enough aggregate demand. A rich person cannot eat more than 3 times a day. You cannot eat 100 times. So you need enough aggregate demand. And Marx was right. Capitalism is going to destroy itself from within because of underconsumption. If the share of labor shrinks, the share of capital increases. The only way to prevent it is to redistribute from the winners to the losers. So we're already in a mean-tested UBI. We're going to make it bigger. That's what's going to happen over the next few decades. That's going to be the political solution to massive permanent unemployment. It'll be socially disruptive, but the alternative is a revolution.